All right, let's take a look at some of the stocks we're watching during today's session. Of course, shares of Amazon popping higher, making this company a $1 trillion business after fourth quarter sales far surpassed analyst expectation thanks to holiday sales and profit from the company's cloud and its ad business as well. Johnson & Johnson shares in focus after a California judge ordered the pharmaceutical giant to pay a $344 million settlement in a lawsuit in which state officials accuse the company of deceptively marketing surgical mesh devices for women. And shares of IBM rising after the company announced the resignation of CEO Ginni Rometty, who will be succeeded by Arvind Krishna, head of the company's cloud computing business. Not a subtle move here from investors. That stock rallying on the news that Rometty be removed. Also installing your cloud head to replace Rometty. I think Sazi speaks to a lot of the problems that IBM's had over the years.
IBM, I just wrote a story about this. They're looking for their Microsoft Satya Nadella moment.
Maybe they found it.
Maybe they did.
The market right now selling off. Check out the Dow. We are down close to 600 points. The Dow's off just about 2% right now. Joining us to discuss, let's bring in Ira Epstein, managing director at Linn and Associates. So getting a little bit weaker here, but we've been down all day, every sector except, where Amazon is in the red. In particular, watching energy here. What do you make of today's action and whether or not it's safe to come in here and buy a dip?
Well, first of all, you're getting the dip and they're not buying. Why would you buy in front of a weekend and anything that you don't have to when you're anticipating numbers that are going to come out of China with the coronavirus that might be a bit scary? If the numbers aren't big, and they're averaging over 1,000 a day new cases around the world, not just in China. So all total that. So yeah, I'm figuring you come in on Monday and you have 14,000 total cases. If it's way more than that, the market will be very nervous. If it's under that, the market is looking for a crest. And frankly, yesterday, I think the WHO, the World Health Organization, did no one any favors by taking 4 questions and saying they were tired from the whole week. I think they could have put a lot of this to bed by telling us when a crest is expected, what they're seeing. They didn't do a very good job of that, in my opinion, and I think we're seeing that today in the marketplace. No one wants to fly there as an air pilot. All the airlines in America are cutting back their flights now from that. So there's a fear element, but we have to remember, what do we have, a 5% break in the market when you're getting down here? Isn't that what people wanted to buy?
That's well, Ira, we were just debating earlier whether this is about the coronavirus or if this was the corrective moment that so many people had been calling for, throughout the month of January. But, thinking also about the domestic economy, we got that weak Chicago PMI number earlier this morning. Did you make anything of that in terms of maybe the U.S. economy isn't in as strong a place as some have argued?
Well, we're strong, but it's all on a relative basis. What we've done between the coronavirus and Boeing, taking these big hits that they're doing, is we're sort of setting up the first quarter results going to be a low bar. And because of that, I'm guessing that as we get into the second quarter of the year, we're going to be in a better place. Also, we were looking at 19 times earnings on the S&P and other areas. Come on, they're trying to rewrite books because the Phillips curve isn't able to be figured out why we're not getting inflation. Now they're saying it's okay, you can go to any earnings number. We know better than that. I've got gray hair for a reason, been doing this 5 decades. You don't just throw those things out. And markets don't grow to the sky. So what happens is you get these corrections, you scare people, and for 11 years or so, running now, we still see that the market is a buy on the deep break. What is the deep break? It's certainly not 3 to 5%. I think bigger is a deep break, and that's possibly what we're going to do right here. Is it a recession number? No. Do we have to worry about inversion in yield curves? Yes, but they generally take longer than this to work themselves out. When you first get them, there's a 12 to 18-month cycle. So there is something to worry about maybe in 2021, but I don't see that right now. I think this is panic off of coronavirus, and we're at too high of a valuation to begin with, and we're getting a pullback.
Ira, the selling we're seeing today still seems somewhat orderly. Do you think that deep break that you're referencing comes next week? We've had a lot of crowded positions, especially in tech. You would think they would all unwind at once, especially in this market.
No, I don't think they'll all unwind at once, but because you've come down so much as the market tries to lift its head, those that think that they should get out on that bounce because the coronavirus isn't going to go away in one weekend, well, they'll use that to lighten up. So what we're doing right now is the rallies, and we don't have any today to speak of, but the rallies per se will probably get something of a cap on them. The ideal thing for China, and there's nothing good about this, the ideal thing was it's Lunar New Year. We were going to see factory closures anyways. The big question we all have to ask is, when can people go back to work there? The quicker they can go back to work without contracting a disease, the quicker this event ends. At the end of the day, it's a virus. It's not wiping out mankind. There's 170 some odd people, 200 people dead. That's sad, very sad, but it's not thousands of people. It's not the plague. Everybody's got to understand that.
And so, Ira, just thinking more broadly about the market right now, we haven't touched yet on what's happening in the bond market. We've seen huge moves there. When you think about a sign for where this, break goes, if we start to break lower or if we see some recovery, are you looking at the VIX? Are you looking at oil? Are you looking at bonds? What to you kind of tells the story of this market right now?
Okay. Well, we've been watching the crude oil come down. They were the most likely target to get hit first. And the reason is China's half the world consumption of the oil. So that was your first fear factor. Again, we have to understand it's Lunar New Year. You're going to be a little softer anyways. This has certainly exasperated it. Then we have to look at the fact that what's a real number in the oil and where do the producers start taking supply off? Even for American producers getting down to $51, $52 a barrel, now are you profitable anymore for a lot of the people? And the answer is going to be no. OPEC's going to meet probably in February, do another cut. But that's the supply side. You still got to get the demand side. As for the bond market, we went to 144 in October in the 10-year benchmark number. We're at 154 thereabouts now. There's no magic. The market is telling you that it wants to be fed lower rates and it needs them. Europe didn't pick up very much. They're showing a bottoming tendency, but this corona situation hurts them pretty hard. And as they're going to get hit, they're not going to be raising rates anytime soon. You're not going to see us doing anything if you watch Fed Chair Powell. And he, of course, said the right thing. Nobody quite knows what this virus is going to do. I have to assume science is going to be there. I have to assume that China will wrap its arms around it. And so far, while it's spreading here in the city of Chicago, one person passed it to another. The people that have gotten it that are in good physical shape to begin with seem to have no problem. It's just like another flu. Let's see where that carries you. But you're getting the safe haven buying. We see it, and it's a Friday. Why would anybody step back into this market?
Ira Epstein, Managing Director at Linn and Associates. Have a great weekend.
Thank you.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.